Okay. All right. So this is a webinar that I did a while back, and it's really uh, it's really good. Even though I've been using this for a long time. Sometimes things come in and um, you know they they settle, and things are things work really well. Okay. That's part of having some experience and the ups and downs of the markets. But this is a 0 DTE trade, 0 DTE webinar that I'm going to share with you. That's going to give you a lot of insights into how and why things work, and the kind of things that you're going to be able to understand uh, when something goes wrong, basically, right? And when you have a threatened trade, you want to be able to get out of that and get out of it, either profitably or nothing to get you down to like a max loss or anything like that. And so that's what we want to avoid as traders. And so with that, I am going to share share with you guys, and I think it's going to be very valuable to you. All right. So here we go. So my name is Al Asada. I've been trading 0 DTE for about 5 years, and basically I trade it every single day. Okay. And so while we do this, right, towards the end of the session today, I'll be talking about breaking barriers to allow you to expand your width of in trading, and hopefully it'll help you. Okay. All right. So here we go. So what are we going to do? What can you expect? I'm going to show you how you can make consistent monthly returns using SPX 0 DTE high probability trades. Okay. And so what are you going to learn here today? How basically how I went from taking 0 DTE 3x credit and losses, basically, in very to very few losses in many months. Okay. How to identify strike prices and strikes and strike prices that you'll use to increase your profitability. Number 3, how best to mitigate a trade that is threatened. Number 4, capital requirements to manage in the money and out of the money credit spreads. The best way to widen spreads to gain an edge, and detailed entry, exit, and stop loss criteria to maintain consistency. Right. So stay with me until the end. We have a special bonus for you, and we're going to talk about that. All right. So the first question is, why are you here? Okay. And I set up 3 reasons why you would be here. Okay. Number 1, you're interested in learning new strategies that'll take your trading performance to the next level, so that you can finally leave that 9-to-5 career behind. Number 2, you've seen, heard about, read about others making money trading, and you know that you can do it too. You're just not seeing your account grow fast enough. And number 3, you've tried different trading strategies that you thought, okay, this is it, only to discover that it's just not going to get to the place where you're getting consistent results. Okay. So with that, show of hands here. Number 1, interested in learning new strategies. Number 2, desire to see your account grow. And number 3, find the right strategy that provides the consistent trading results, right? So 1, 2, or 3. Any takers? Yeah, 3. Okay, 2 and 3. 1, 2, 3. Perfect. Thanks. 3, Rowan, thanks. Okay, great. I think we're in the right place. So here we go. All right, so I'm a regular guy. My family on the left-hand side, parents on the right. That was an MBA program a long time ago, and it was really valuable to me. But in any case, let's talk about mindset, right? Because mindset is really important for a trader. And so let's imagine what it would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time. Also, excuse me, becoming the trader that no longer takes large losses but consistently trades according to a proven trade plan that is profitable over time and allowing your account to grow month over month, right? Everybody wants that. Every trader wants that, okay? So, and that's really what you need to aspire. So let's talk about first SPX credit spreads and what they are. Credit spread is a combination of two puts, two calls, where a put or a call that is sold is more expensive than a put or call that is bought. And so that's why you receive a credit when you get it. And so what you're getting is you're taking the 40-50 strike, and this is a 10 wide, right? And it's a 40-40 strike as well for a put. And so the 40-50 position is higher than the 40-40 position, so that's why you end up with a credit. And so multiplying that out by 50 cents times 100, that's $50 for that position. Okay. All right. So that's what you get, and that's actually what your max gain is for that position as well. So you're selling it, and then you're buying it back or letting it expire. Okay, and that's how it works. So again, you're selling a 40-50 put and buying a 40-40 put, and the trade is considered to be a high probability trade. Okay. All right, so now let's talk a little bit about decay, because decay is really one of the most important things for option traders, especially for selling options, because it gives you an edge. All right, it's in your favor. And so what happens? From 68 days to 33 days, the rate of decay is 34%. And so this instrument, okay, has volatility, and it decays over time. And so that's why it goes down. So from 33 days to 5 days, the rate of decay is 57%. And from 5 days to expiration, it is decaying 100%. And so imagine we're talking about 0 DTE, right? So that's even four days less, that it just goes away, okay, very quickly. And so this is one of the things that really helps traders to understand and leverage it, so that you can do this every single day. And I do this every single day, unless I have to go to the doctor or something. So in any case, this is what I do. And so implied volatility, very important. So the ideal setup, especially for 0 DTE, is when you want to put on that trade. You want to put that trade on between 9:30 and 9:35. Okay, that's almost, I always do that, unless I really believe that it's going to go in one way, right? And so I'll wait until that happens, and then cash in. So most of the time I can do that. I'll obviously, not all the time, but it works. Okay, it just works. All right, so the other probability factors are theta, which is the Greek, and we just talked about that as well. It's basically, it measures the rate of decline in the value of the option due to the passage of time. So that's the decay process. Number 3 is market direction. And so if you're very good at Fibonacci and ABCD patterns, blah blah blah, those are things that are very helpful as well in trading. And if you're understanding the dynamics of up and down markets, right, you can profit from that. And so when you put on a put spread, you want to see the market going up. and when you want to call spread, you want to see the market going down. Okay, and that's how you profit from that. All right, so let's talk about risk management guidelines and daily routines. All right, number one, I always follow a plan. Right, so make sure that you put out a plan that works for you over time. Okay, so you want to be tweaking that plan continuously, so to make sure that, because markets change every so often, and then you want to learn new things to enhance what you're doing. Okay, so so first of all, you want to have a good trade plan. All right, number two, you want to understand the max loss and risk reward before entering a trade. Excuse me. And so so you want to know where your money is going. Okay, very important. Also, especially in credit spreads, you want to maintain no more than 20% margin at risk. Okay, so if you have a $10,000 account, you really want to trade in the vicinity of $2,000. Okay, and that way, if you have to adjust the trade, it's okay. You're able to do that, and you're not going to get strapped for a margin call. Okay. Don't allow more than a 2% loss. Typically, a lot of traders use 1%. 2% is fine, I believe, and it's worked for me. For highly trending markets, position your trades to follow the trend, and for trading, you want to have experience, and you want to have expertise. Okay, so if you trade small and you trade often, you'll have those things, and it takes a while to really understand markets and get there. So especially if you're starting out, you want to trade small and you want to trade often. Alrighty. So pre-market routine, I always review areas of support and resistance where the market seems to be going. The dollar, because the dollar and treasury notes both have insights into where the market is going to go. Okay, just based on forces of nature here in the markets. Okay, so you want to review ES futures trending direction. Just keep in mind that SPX opens at 9:30 in the morning Eastern and closes at 4 p.m. Eastern, and so after that, ES takes over, right? Because it's a derivative of of SPX, and you can really see the trend going across the week, because it's open all day long. Okay, at night as well. Review the VIX level. The VIX is the volatility index for where the market is in terms of volatility. And if you have high volatility, your positions, excuse me, the positions will be further from the market based on the strike price. And if the volatility is lower, it just does the opposite. Okay. All right. Determine credit spreads before you put on your positions. Understanding, especially with 0DTE, you want to be very, very, very ready to put on a trade. And I do this every day, as I mentioned. Okay, I'm in a 0DTE trade right now. Okay. Okay. So this is the conditions that I use before I trade. I want to understand where that position is going to be placed. Okay, and so I can just pick it out and boom, and put it right in the position where I want it to go. And so real quick, these these positions are there, and that's why I pick I pick them, and then I place them into the platform to trade. Okay, so post-market routine: determine if rules were broken and why. Determine if risks was within acceptable levels, especially for wins, because once you keep if you keep winning over and over again, what happens is that you get complacent, and you don't want to get complacent as a trader. You always want to be sharp. Continuously look at your trade plan, take notes, and make sure that things are moving in the way that that you want them to be. And if they don't, you have to take a step back, look at what you're doing, and create use a smaller footprint for your trades, and then get back on the saddle. Okay. All right. So determine if tweaks or adjustments in a trading plan is necessary, and update your trading journal with your findings. Okay, so this is 0DTE. Okay, so we're going to talk about the entry, exit, all that stuff. So before that, let's talk about PDT, because it's really important. If you have especially with 0DTE, if you don't have $25,000 in your account, you can be subject to a pattern day trader, and that's not a good thing. So basically, it is a buying and selling and buying in and out with the same position, and you can only do this three times within a week. And if you go over that, you could get restricted and not be able to trade until you upgrade your portfolio to $25,000. Okay, you can trade, however, if you're not restricted, and you can do this basically by a few ways. All right, one, limit your trades to one trade 3 days a week. You can do that. Manage your trades from multiple accounts, different accounts, and trade wider iron condors. Trade with a non-spread cash account, which is really not good, because you can only do that with directional trades for that. However, you can have a cash account and trade directionally, and that works. So you're not subject to PDT. And then trade ES future spreads, because you can use ES futures spreads and you can trade them all day long. Okay, and there's no and it's basically very similar to SPX, only you're trading a different derivative from SPX, and they work, and there's no PDT restrictions on those. And I know guys that use that even and when they trade, and you can open it, close it, and you're good. No restrictions. I never understood why they do that. Why SPX do that, and every other thing out there, trading, there's no restrictions like that. Anyway, who knows why? All right, so to enter a trade, I like to get in the first 10 minutes. Most of the time, I actually get in at before 9:25. Okay, 9:35, and so that's when I trade it. And even if I have to wait a little bit, because even this morning, I did that, and I was able to wait a little bit to get the right position in, and I got it, and I still basically got in at 9:26 or 9:28 or something like that. But it was really short. Okay, I use a delta of 5 to 6 typically for a position that's 10 wide. Actually, I haven't used 45 in a long time, so I'll let you know. So 50 to 70 typically. Sometimes I have to go to 75 if the and this is usually on the call side. And I've done that before, just because it goes from 75 to 45, and for some reason on the call side it always does that. It's pretty smoother, much more smoother on the put side. Who knows why? Okay, so wider spreads provides a greater distance to the market, and we'll talk a lot about this. Okay, and why you should use 10 wide, and I'm gonna share that with you. Okay, so exit, take profit. Take profit for 10 cents, and I've implemented this. I've done this before in the past. Typically, I have a trade alert service, so I use expirations to close positions, because I don't want to see people. I don't want to see people get PDT restricted, so I help them. And so what I'm doing now basically is I use bigger positions, and yet I let them close, but I'll hold a 1 or 2 position, so that everyone is with me, so that basically it goes to expiration, and really I try to do that a lot. So in a month, basically, I'll tend to roll a position maybe 3 times in a month, 3 or 4 times. Most of it, all of that. So typically most of those positions expire. Okay. All right. So you can also close the short side of the position and just let it ride, but it still incurs PDT restriction as well. Okay, just to let you know. And then expiration, as we talked about. So always don't allow a profitable trade to turn into a non-profitable trade, and that's really something that you should do. All right. Exit, adjustment, or roll. I typically roll a put spread and take a loss on the call spread, depending on where the market is. And so and you want to if for using an exit to take a stop loss, I use a 2x or 3x, and typically it's 3x credit to close that trade. Okay, so if you put on a trade and it's 50 cents, you want to close it at $1.50. Okay, it's just an example. I wanted to say too, this is being recorded, and so don't worry about it if you miss something. And so yeah, if you can't find something or do something, then don't worry, we have a replay. Okay, and you'll get everything. And all the questions that come in after, you'll be fine, and we'll go through that. Okay, all right. So just stick with me to the end, and I will answer all of your questions. So let's talk about managing trades. Okay, so putting on a position is really easy. The hard part is managing it after you got it. Okay, so 5 minutes, put it on. The rest of the day, watch it, and you'll be good. Okay. So let's talk about where these positions are placed and how volatility reacts to that. Okay. So this is distance from the market. 5, you have a 5 wide, 10 wide, and a 15 wide. Okay. And so you can see here, especially with the 5 wide, it's very, very close to the market. You get a lot more on the on the put side. However, if you go to the width on the spread here, it's a lot more. Okay. So you go from 9 to 1.2, from 1.2 to 1.7. After that, after the 10 wide, what happens is you get a diminishing return. So you'll see here that it goes less, and then especially, it's weird because if you're putting on a 1 DTE, the 1 DTE is is less than the 0 DTE when you're looking at a market. Very strange. All right. So the sweet spot for me is 10 wide, and I've been using 10 wide for a long time, and it works really good. So another example here. This is a VIX 27. Typically we're in around 15 VIX, but this is a lot more volatility, and you can see here it goes way higher. Okay, I love trading volatility, just because typically, especially when the market starts, that you just get a crash in volatility unless the market just is going up and down, up and down, and up and down. But getting into a trade that you have high volatility, it's just perfect. It's just a perfect scenario. Okay, and here's a 1 DTE that I mentioned before, right? It's actually lower at 1 DTE than it is at 0 DTE. It's just crazy. So that's why 0 DTE is such a great instrument to use. All right, so now I am going to take you through a little bit longer path so that you can understand how to manage threatened trades. Okay, and this is the most valuable thing that you can learn with 0 DTE, right? Okay, so this is what happens in a position here. So first of all, this position is threatened, right? Now, right, it's $2.45. And then if we want to roll that position and keep the same strikes, I think it's the same strikes. Yes, it's the same strikes. You roll it for the next day, you're going to get a $1.75 credit. Okay, it's up or down depending on volatility, but that's what happens. So same strikes for $1.75 credit for the next day. Bear spread, same strikes next day, a lot less, right? A lot less credit here, premium. And so that's what happens with the call spread. And that's why it's more difficult to manage a call spread, because you don't have that additional volatility for it. Same strikes, $1.15 instead of $1.75. Right now we have a bull spread roll down next day, and so 245. So we roll it down now. This time, not the same strikes, right? We roll it down. So a 25 cent difference. You still get a 35-cent credit for that. Okay, pretty nice to be able to do that, as long as you are not in the money. Okay, so these are positions that are not in the money. So you see 35.80, right? And it was just 5 cents, right? And we'll see. I'll take you through now what happens out of the money. I don't know if I do it now, but we'll see. All right, so this is 40.50, 40.42. Okay, so now we have a 240, same thing here. So this is a bear spread rolled down next day. Okay, excuse me. And so now here, instead of 25 cents, you get 15 cents, and it's a $30 credit. Again, the bear spreads are more difficult. Okay, now we got a bull spread, rolled down and widened. All right, now we're going to widen this spread. So now in this case, we went from the 245, rolled down, created the width instead of a 10 wide, we did a 15 wide, and you get a 15 credit here. And now you got 45 points on it. Pretty nice. But you always have to be careful with margin, right? So once you widen the spread, you're probably going to keep it there until you roll it again, and it could get unmanageable, okay, when you do that. And so I used to do this. I used to widen spreads, and I actually don't do that anymore, okay. But I wanted to share with you how this works. So now we're going to do a bear spread widened. And so in this case here, you get 25 cents and a 35-cent credit. Okay, so it's just like the bull spread, but you get a lot more, you get a lot less premium on here, not premium, but distance from the market. Okay, bull spreads, same strikes, 2 days out. So now we take it out 2 days, and this is the same strikes, and now you get $2.15. And so 2 days instead of 1 gives you 40-cent higher credit. Excuse me. Bull spread rolled down, widened 2 days, and here you get a nice, really nice long way down, okay, from 75 to 35.15, and you get a 35-cent credit. Pretty nice. 60 points away, but there's a price to pay. Price to pay. All right. For 0DTE roll down, widen 2 days with the bull. Let's see, bull spread. Look at that. You get 100 points. That's huge, right? You get 100 points, and that gives you, that widening gives you that 100-point range. So pretty nice. Pretty nice. Okay, so now let's go through bull spread, same strikes, next day, in the money. Now we're in the money, okay? And this is the painful thing. So now you're in the money, and look what your premium is, now. Instead of 275, you're at 610. So here we have 35.80, and now it's just $10, right? $10, and you get slammed on this thing. So what do you do if you're going to roll it? You're going to roll it same strikes. You get a 90-cent debit, and you are negative already. Not a good thing. So in the money credit spread will always end up costing you out. Getting out of it, all right? A lot of money. 610, this is a bull spread, same strikes, next day, bull spread, okay? And in this case, you get a $3.30 debit on this. This is the bull spread, yes. And that's when you roll this trade and move it down, okay? So you're just going negative all the time on these. Here again, spread roll down, widen next day. Let's see what we got here. Widened. Okay, so we widened it. we got 25 cents, or no, 15 cents of distance, and it's basically zero to get it. Alrighty, so let's look at a real live position here that I did. So I put on 60 cents, 10 wide. And you can see here the market went down. So that point here, we closed. I closed the. I can't remember if I closed it or if I let it expire, but it doesn't matter. In this case here, rolled that position, widened it by 5 points, and I got a 40-cent credit, which was nice. And then the next day, basically, it expired worthless. Okay. Here's another one. Put on a call spread, put spread, and then we rolled it. Same thing, 30 cents. And what happened next is I'm going to take you through what happens, okay, during when you actually roll a trade, a 0DTE trade, and how do you get out of it, okay? So the original trade was 41.15, 41.05. Rolled that position. Okay, rolled it. We widened that spread. We got a 30 cent, right? Just that last example. Okay. Now we're putting on a new position. Okay, and for 90 cents, and it's widened. Okay, it's already widened. It's 15 wide. The rolled position, we had to roll that again, and now we have that 85. Yeah, so it wasn't widened this time. And then we put on a new position, $1.05, and then rolled that trade. Okay, we didn't widen it again. We left it the same width. And then a new position we put on $1.30, and I believe we were able to close it for 10 cents, and we have a total credit of $1.20. So rolling that trade, right, allowed us to manage it and get an additional credit for that. Okay, it takes work to do it. You can see here that we went from 510 to let's see, 510, yeah, to 16 May. Yep. So 6 days, 7 days to get out of that trade, and that's what it takes to do it. All right, I'm going to give you an example because we don't have our P&L yet, done. But this was these are real examples of a one DTE, basically one contract. Okay, I was trading one contract, and you can see here that for each month, basically we made profit every single month on that. And yes, we had to take stop losses. We had to roll trades. Okay, but every day, every month, it was profitable. And I can tell you that between the monthly and the 0DTE, they're just solid, very, very solid. 7DTE takes a little bit more work, for that. But I can tell you that 0DTE is the best performing positions that I do other than futures. Okay. And it just really, really works. Right. All right. So I have my positions here. I do this every Monday, Wednesday, and Friday. Okay. You can see my positions on the next day, and I share those every Monday, Wednesday, and Friday. So you have a glimpse of every position that I trade other than futures in what I do. All right. So you get this for free. Just sign up for the go to my website, and simpleoptionstrategies.com, and you can download this newsletter, and you can use it every day. Okay. And I've been doing this 4 years, 5 years on this, and so you can see every position that I do. All right. So the question is, would you like to follow our trades while you learn our short-term position trades, especially 0DTE, to make you consistently profitable? Yes, of course. It's awesome. You can do this. You have a way to learn while you earn. Okay, and we teach you how to do this. All right. So if you're interested in learning new strategies, you want to desire your account grow, you want to find the right strategies to provide consistent trading results, this is it. Okay. It works, guys, right? So time to break the barriers. So what are you going to do? Are you going to keep doing what you're doing and you're going to get stuck? Or are you going to break out of this thing, okay, and finally take finally take the steps that you do that makes it work, okay? So you have to have a no quit attitude, commitment, discipline, and having an edge, and multiple edges. All right. Now, in our trader group, we have live traders that trade for a living, right? And they've been doing this for a long time, including me. And so we're surrounded by people who do really, really well. Okay, and this is what they do for a living. And so we get our trade alerts. Most of them are automated. Okay, and I'll show you the screens here. Okay, and then we have one-way communication and we have two-way communication. All right. So if you're a successful trader or you're learning, this is for you. Okay, it's a great way to get in and make money while you learn. And so we have live chat groups. So this is a one-way communication, right? So you guys can answer, you guys can ask, and we answer your questions. Ike has been trading, I don't know how many eons, and he's a I can't remember that. Anyway, I can't remember, but he trades futures and Elliott Wave. Okay, he's an Elliott Wave guru. All right, and he's with us all the time, and he has live chat groups every single day, Monday through Friday. Okay. Then our other side is the trade alerts. Okay, so these are the trade alerts that is one-way communication, and so these are very, very accurate. There's no getting around it, and it shoots it out from my account into these groups. Okay. All right. So a lot of trader success stories. You can go through those. And a lot of guys come through and they learn and then they leave. And I wish they all came back, but that's what we do. We educate people, teach them how to trade, and then they go on. A lot of them go on their own, and a lot of them stay with us just because of the camaraderie and we're always looking for new trades and how to do that. Okay. All right. So I do have a guarantee. If you trade 1 month with us and lose money, I will refund you $125 for that subscription. The caveat is that I've never had to give money back because they make money every single, every month that they come in. Okay. All right. So here is our subscriptions, and let me put up the the offer here. Okay. So we are open now. Okay. Typically we are closed for 3-month periods, and then we open up the new subscribers. They can join, and the reason for that is because when we started, people would come in and they'd kind of just trickle by, and we have to constantly tell them hey, this is what you have to do, this is the things, and it's just one-on-one. So what we did was we closed it, we put a wait list in, and then people come in and they join. Okay. And then they get all the information at one time, and so within 2 weeks everyone knows what they're doing during that period of time. So that's what we do, and right now we are open. Okay, so I think within a week, I think we're going to be closed, and so we have a free wait list, or free, it's a free wait list that you can join, and you can start understanding what we do. We do put some trades out there, and then we have the swing trader, day trader, full-time trader, and pro trader. Okay, so if you're joining now, you can get in with the 59 plan, 99 plan, 129, and 199. And so here are the different plans. Okay, so there is a monthly plan, and so this is a monthly plan, and you get subscriber groups, a lot of free plans in there as well. Just we have them in there. Okay, so we have the swing trader. That's a monthly expiration trade. These are monthly European 3-week expirations. Okay, then we have the day trader, which is monthly, and we have 0DTE, 7DTE, and premium trades. And Ike does the premium trades. I do 0DTE, 7DTE, and monthly. And then we have the full-time trader, which is Ike manages that, and he does futures alerts, and we do ES options on futures. And then we have the pro trader plan, which is hardcore. Okay, fast profit SPX options. We do and that's Michael that manages those, and he does a lot of directional trades with SPX. Okay, pretty hardcore. And so but we get testimonials like, hey man, I made $2,500 today, and these guys make really good money on these pro trader plans. All right, so that's what we have, and the question is this for you? So do you want to learn a step-by-step process to gain income in a market that goes up and down? If you want to finally break those series of losses and account drains, you want to earn consistent income that sets you apart, this is it, guys. This is where it's at. Okay, it's really a great way to get in to these types of positions here. So yes, we are open, and we get $20 off for life, and you can join us this week or next week. Or next week, no, we'll be closed next week. All right, and we get a trading education channel with great content. Also, our automated signals that we have. We share basically the trade entry, fill price, the target price. We help you manage your adjustments on the trades, and you'll get my guarantee that you will make money. these trades. Okay. All right. So we are, yeah, and it's a win, right? All right. So now I am going to, let's see if you have any questions. Let me see here. Okay. Present, yeah, we talked about that. What is the WL percentage? Oh, win loss percentage. I haven't measured that in a long time, but I can tell you that it is in the 80 percentile range. Okay, or else we wouldn't be in business. Do you ever recommend using 80% profit? Absolutely, yeah. So so right now I'm actually trading 0DTE, and I have 5 positions now, 5 contracts. And what I do is I let the 5th position go to expiration. Okay, so that way, those of you who want to get out of the position, it's great. You have over $25,000 in your account, and you can trade that. And then I manage, and help those people who need to let those positions expire. Okay, and that way they won't get in PDT trouble here. Okay, but I do use also with monthlies and with 0DTEs. I close those trades at 10%, and at 10 cents. And sometimes I close those trades even before that. Okay, when it's profitable. Okay, so that's what I do. All right. So with that, any other questions? Alrighty, I checked out your site. See SPX credit course. Yes. Okay. Yeah. So I created a course a while back, and and I actually reviewed it a few months ago, and it's still really it's a great course, and it's $129 for it. And so you learn all the different trades. I think other than futures, but it's a great tool course for you, especially if you're joining. So let me see. Do you say that you're allowed 3 trades a week to close in a day? Yes, you can do that. If you're within a 5-day period, you can trade 3. You can trade 3 positions, right? And you'll be fine. And sometimes when if you have to roll a trade, which is basically your it is a position, an in and out position. You're able to do that 3 times within a 1 week period. Okay, and I watch that. I watch that. All right. Anything else? Any other questions? All righty. So really, thank you for sticking by with us, and hopefully this was of value to you. If you have any questions at all, just send me an email, al@simpleoptionstrategies.com, and we'll be here. All right. Hope to see you in the trading room, and have a great rest of the day. All right. Thanks, guys. Bye-bye.